This is Horizons Middle East and Africa, our top stories this morning. Deep cuts. Treasury Secretary Scott Bessent fuels market expectations for Fed easing, telling Bloomberg it's time for a series of cuts, starting with 50 basis points next month. Talking tough, US President Donald Trump warns Vladimir Putin that he would face very severe consequences if the Russian leader does not agree to a ceasefire at tomorrow's summit. And Tencent shares climb in Hong Kong after China's most valuable company beat estimates in all reporting segments. It's just gone 8 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Verdon in for Jemana Bessent. Very good morning to you. Welcome to the programme. And it seems that August has arrived. If you look at currencies, if you look at bonds, if you look at stocks, we've got volatility at its lowest levels this year. And you can see that in the futures and equities picture this morning. Pretty range bound, though it's red across the screen as we look to the Asia session as well, already starting in negative territory. But here in your cross asset picture, the 10-year yield at 4.23, euro dollar at 1.17. Our interview with the Treasury Secretary Scott Bessent really weighing on the dollar and yields yesterday, and we're going to dive into that in just a moment. But sending Bitcoin to record levels, and it's marching even higher this morning. And you have gold higher as well, not just because of Bessent's push for lower rates, but also as we look ahead to that Trump-Putin summit in Alaska tomorrow. We're going to dive into all of that throughout the programme, but first let's cross over to Min Lo. She's in Hong Kong for us with a look at how Asian markets are faring. Min, looks like red across the screen where you are too.
Yes, it is. As you said, we actually had a pretty good week so far. The last few days have been green, and then looks like stocks are pulling back a little bit, maybe a bit of profit taking, but of course led by the Nikkei 225 down by 1.5%. That's really because of the big move in the yen. Look at where we are. We're trading 146.55 at the moment, down about 0.5% on USD JPY. The yen is at its strongest level in a couple of weeks. That's after Scott Bessent made comments saying that the BOJ has been behind the curve in addressing inflation and in hiking rates. And of course, that has a negative impact on the export-heavy index, the Nikkei 225 there. The TAIEX as well was flirting with record highs yesterday, but today pulling back by 0.4%. But elsewhere in Asia, China is showing quite a different picture. We are seeing stock turnover in China topping 2 trillion yuan. That's a level that we have seen around the DeepSeek moment. So a lot of interest coming into the Chinese stock market recently, perhaps because of the earnings season looking pretty strong. We have Tencent reporting yesterday. You can see the stock up about 1.3%, of very strong earnings in the second quarter, beating estimates. And that is despite the credit data that we got from the PBOC yesterday showing a contraction for the first time in nearly 2 decades. Both households and corporates actually focusing more on paying back their loans rather than taking out new loans. And that tells you a little bit about the sentiment from consumers here in China.
All right, well, I'm looking forward to diving into those Tencent earnings with you later in the show, Min. For now, we'll see you in a bit. Thank you, Min Lo in Hong Kong. And I want to dive back into that interview that we had with the US Treasury Secretary, wide-ranging and market-moving as it was. Scott Bessent urging the Federal Reserve to cut interest rates by 150 basis points or more.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
For more on how the currency markets are reacting, let's speak now to Mahjabeen Zaman, who is head of FX research over at ANZ. Really good to have you with us this morning, Mahjabeen. Thanks so much for making time. Let's start with these comments on the Fed, because we've got the traders pricing now fully pricing a September cut. And that's only by a quarter point, even if Bessent wants 50. But I do wonder whether actually we're underestimating how much of a weaker dollar there could be because of this pressure, this political pressure on the Fed to cut.
Look, I think it is quite surprising to hear that from Treasury Secretary, looking to signal, such a deep cut. A cut like that would take the Fed rates to something like 275 or so. And, rates at 275 when inflation is running above 3% doesn't quite add up. So we do know why the administration wants lower interest rates, and the reason for that is really to bring longer yields lower, bringing the cost of debt lower, which kind of makes sense. But at the end of the day, the reality is that between now up to the September meeting, we are going to see a push and pull of market expectations between that 25 basis points, which is pretty much priced in, and, these headlines, such headlines, inching towards that 50 as well.
Well, when you're compiling your dollar outlook, is it all about headlines over data now?
I think it's both, it's the data. We are, of course, like everyone else, waiting for the next CPI, next jobs data to see how, soft the labor market is, as was in the last NFP. And then, of course, at the same time, interestingly, the U.S. Economic surprises, although while we are saying that the jobs data is negative, other indications there seem to be okay post-tariff world. So again, we are calling for a weaker dollar, but not a crash lower. I think the large move has already taken place in the first half of this year.
Do you think that having a longer candidate list for the next Fed chair is necessarily going to make the FOMC more dovish? Or do you think that that dovishness, if it comes, will be after Jay Powell leaves as chair?
No, look, I think, we saw the headline that Trump administration did, or Trump came out to say that he might announce the next chair a little bit earlier. Again, that's going to weigh on expectations. Now, of course, there are a host of names out there. We do know that, of course, Waller, Bowman, dissented. So clearly they're outright dovish if in case they do come through, and that's going to have an impact on, obviously dollar market pricing. Miran is another one candidate. All of these are kind of the leaning dovish sort of candidates. And then we've got the other basket who, a couple of names that have come up, James Bullard, for example, as well as Kevin Walsh, who have actually previously written a couple of times about Fed independence, who would be really looking, again, more, a little bit more on the neutral, not hawkish side. So it all really depends.
Yeah, I just wonder whether being on the list is going to tempt the more hawkish names to sound and vote a little more dovishly. But look, it wasn't just the Fed that Bessent was talking about in this interview. He also touched on the Bank of Japan, and I just want to play you a little bit of his commentary there.
The Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control.
Mahjabeen, you've written about the yen's vulnerability, but isn't the Treasury Secretary helping the yen on multiple fronts here?
You could argue those comments clearly have when you look at market pricing right now. But, I think what we have to think about really is that, yes, we do think the Bank of Japan will be hiking potentially in October, but a lot of it really depends on the growth outlook. We are getting Q2 GDP data tomorrow, and it will be interesting to see whether Japan has effectively escaped the technical recession after the last data, which was underwater. Now, again, you cannot raise interest rates if your growth is at risk. Of course, the tariff risk is out of the way, and I think the Tencent service shows that businesses are going to continue investing and kind of paints a pretty positive picture, a little bit of a recovery coming there in Japan. So yes, we do expect hikes ahead, which should help the yen. But again, it's kind of a wait and see. Of course, Japanese yen is a function of yield differentials as well.
And speaking of growth, in the UK, we're going to get the latest GDP numbers at 7 a.m. London time. The expectation is it's really going to underscore the stag in stagflation. That won't help the fiscal picture. How much do you think that will weigh on sterling against the euro if we strip out the dollar story?
Look, I think that's a great question. I think, so far we have seen the sterling outperform since the last BOE meeting just because it was, on the hawkish side of things. But fundamentally, as you said, the data is pretty weak in the UK against deflationary environment. Services inflation is something that we need to keep watching in the UK. Overall, we are quite negative on the sterling relative to the euro. I think the euro has a lot of things going for it right now. I think that momentum is going to continue. So euro should be outperforming the sterling, we think, going forward.
All right, well, we'll have coverage of those numbers on the opening trade at 7 a.m. London time. But for now, Mahjabeen Zaman, so good to see you, Head of FX Research over at ANZ. We thank you. But coming up on the programme, talking tough, President Trump warns Vladimir Putin that he expects results from their historic summit tomorrow. We'll bring you a preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. To geopolitics now, President Donald Trump has warned Russia that it will face consequences if Vladimir Putin doesn't agree to a ceasefire with Ukraine in the coming days.
Yes, they will. Yeah.
What will the consequences
there will be
consequences? Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
Meanwhile, European leaders have stressed to Trump that Ukraine needs robust security guarantees to ensure that any deal reached holds. Joining us now for analysis is Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. Morning, Stuart. Would Russia really agree to a ceasefire unless Ukraine hands over territory, which, of course, President Zelensky has ruled out?
Yeah, good morning, Lizzie. I mean, I think that is the key question. And I think the assumption is it's going to be very difficult for him to sell a deal that has no territory involved to his own government. Remember that he went into this basically saying it was an existential question for the future of Russia. And if he comes out of it with no territory gain, then it's going to be very difficult for him to justify both the cost in economic and in terms of, obviously human life that they've had to go through in the last several years. Might there be some permutation around security guarantees, a guarantee that Ukraine is never going to be part of NATO, that he could sell as a victory, conceivably, but it seems a little bit of a long shot.
And we had this Trump call with European leaders. Do I detect a disparity between the readouts from both sides in terms of, what happens if Putin doesn't agree to a ceasefire tomorrow? Is there a sense that there's a different outcome in their minds, especially when it comes to a follow-up meeting with Trump, Putin and Zelensky?
No, I think you're right. There's definitely an element of that, although it's very hard to parse out quite what Trump's position is, because it does appear to have shifted a little bit in the last several days. It started with the threat of sanctions, or much harder sanctions, and then became, somewhat softer. And now, after this call with the EU leaders, again, that clip you played at the beginning of the segment, he's back to talking about severe consequences. So, I mean, I think really what we're going to have to do is wait and see what happens at this summit in Alaska, get the readout from that and see what Trump's position is. But in terms of the EU position, I think that has been pretty firm since day one in terms of what needs to happen, which is that no one should be making concessions on behalf of Ukraine, and fundamentally you need some sort of security guarantee there that this isn't going to repeat itself, because that is Ukraine's big concern, that you cede territory and that just becomes a launching pad for the next offensive.
All right, Stuart Livingston-Wallace, we thank you so much for that analysis. Bloomberg's executive editor for the Middle East, North Africa and Russia. And, of course, traders keeping an eye on that summit as we look ahead to it. But looking at the oil markets, you've got Brent and New York crude futures up here in the green. We're looking at it being steady, though, around a 2-month low. And this is as we have the IEA, the International Energy Agency, also having said that the market's on track for record oversupply next year. But you have to balance this with the expectation that the summit could result in an easing or a tightening of Washington's sanctions on Russia. As Stuart says, we just have to wait for what those severe consequences could be. But let's get to some other top stories that we're following for you this morning. Leaders from France, Germany and the United Kingdom threatening to reimpose UN sanctions on Iran if a nuclear deal isn't reached by the end of the month. The so-called E3 say that they are China prepared to trigger what they described as the snapback mechanism to reinstate international sanctions on the Islamic Republic. Those sanctions were lifted under the 2015 Joint Comprehensive Plan of Action. Elsewhere, South Sudan's government has denied reports that it's in talks with Israel about relocating Palestinians from the Gaza Strip to the East African nation. The Associated Press has reported that the two nations are discussing resettlement as part of a wider effort by Israel to facilitate mass emigration from the enclave. South Sudan's foreign ministry issued a statement describing the claims as baseless. Well, coming up on Horizons, Tencent shares are rising in Hong Kong after the firm reported faster than anticipated growth across its gaming and advertising businesses. We'll dive into the details next. This is Bloomberg. Bloomberg has learned that Apple is planning its AI comeback with an ambitious slate of new devices, including smart speakers with screens and home security cameras. Sources say at the centre of the strategy is a tabletop robot, which serves as a virtual companion, and that's slated for 2027. It's part of an effort to restore Apple's innovation reputation after criticism that the tech firm missed the generative AI revolution. Well, staying with tech, Tencent shares gained in Hong Kong after the Chinese internet giant beat estimates in all reporting segments, with sales growing at the fastest pace in 4 years. We can dive into those earnings now with our China correspondent, Min Lo. She's back. Min, just talk us through why Tencent's promising prudence on AI spending when we've just seen beats across the board.
Yeah, it's because the monetization of AI in China remains very, very challenged because consumers just don't have the habit of paying for AI tools at the moment. Just imagine if DeepSeek started charging for its app, many consumers would have just, deleted the app and downloaded another new one because the sector is so competitive now. So Tencent's president is saying that they are not planning to hire aggressively or spend a lot of money on marketing for a sector that has still a lot of unrealized potential at the moment. But still, doesn't mean that they're not spending. They have increased their AI spending by 150% in the second quarter. And we know that Tencent's focus is not so much about rolling out new AI platforms, but integrating integrating AI into their existing suite of services. And it's seen pretty good results, especially when it comes to advertising. With AI, they have been able to increase the click-through rates and the targeting, and that helped bolster their advertising revenue. They're also offering AI services for game designers to help them create in-game avatars or in-game assets. So they're trying to find ways to monetize and hopefully get the existing WeChat app to become a platform for AI agent tools in the future.
And just walk us through what to expect from JD.com's earnings that we get later on as well.
Yeah, JD.com, we're looking at a very different picture from Tencent because Tencent, we saw a beat in earnings there, but JD.com, analysts are expecting a hit to its profits because of JD.com's foray into the food delivery platform. It's a newcomer there in a sector that is dominated by others like Meituan and Alibaba. So in the last few months, we have seen very, very intense price competition. We're talking about almost free milk tea. So a lot of money being pumped into these promotions and investments into this new initiative. And so we're looking at cuts to outlook on its on-demand delivery and food delivery platform by as much as over 90%. We're seeing profit cuts to outlook across the sector, but particularly so for JD.com because it's a new player. But at the same time, we still have the government subsidies coming through for those equipment upgrading program, new announcements of subsidies for consumer loans as well. So that could help lift its revenue for retail sales and maybe offer a little bit of relief from the profit cuts that it's seeing because of its expenditure into its investment in the food delivery platform.
Yeah, indeed. We were talking about the potential of that aggressive discounting from Meituan to impact Talabat, the delivery company in the Middle East, just this week. Min, thank you so much for giving us that analysis and preview of those earnings, which, of course, we'll be watching later. But staying with tech, Nvidia and AMD both recently secured Washington's approval to resume lower-end AI chip sales to China on this controversial and legally questionable condition that they give the US government a 15% cut of the related revenue. Now, this came up in our interview with the Treasury Secretary Scott Bessent. He told us that President Trump came up with that idea and could serve as a model for others in the future.
The president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, you know, I think that this is a very unique solution, allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, you know, right now this is unique, but you know, now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right. So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the Nvidia chips becoming the standard in China. Look, you know, Nvidia is an incredible product. A lot of the technology in China is, you know, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the Nvidia, Jensen Huang just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was, you know, with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you know, you don't want to. We're not sending out the highest level chips, and you know, we don't want to sell everything to everybody. So there is a need for intervention.
Stealing, acquiring, potato. That was the US Treasury Secretary Scott Bessent speaking to Bloomberg's Jonathan Ferro and Anne-Marie Hordern. Now, you did see a big impact on the markets off the back of that interview. You saw yields and the dollar dropping on the Treasury Secretary's push for jumbo cuts. You've got stocks taking a breather from their rally now, though. Futures pointing lower across both sides of the Atlantic. We'll dive more deeply into the markets next. And coming up, the US is cracking down on the illegal mining trade in eastern Congo. We'll go to Africa next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Deep cuts. Treasury Secretary Scott Bessent fuels market expectations for Fed easing, telling Bloomberg it's time for a series of cuts, starting with 50 basis points next month. Talking tough, US President Donald Trump warns Vladimir Putin that he would face very severe consequences if the Russian leader does not agree to a ceasefire at tomorrow's summit. And we speak to the CFO of Oman's OQ Exploration and Production, Jaber Al-Noumani, after the company delivered a robust set of financial results for the first half of the year, despite macroeconomic challenges. Well, it's just gone 8:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jemana Bessent. Welcome to the show if you're just joining us, everybody. And you're looking at the futures and equities picture pretty range-bound this morning, treading water after the rally, so taking a bit of a breather. But it feels very August. We've got stocks, bonds and currencies all at their lowest volatility so far this year. So it seems calm despite all of the risks that are floating around in the background. But flip the board over to the cross-asset picture and you can see we've had the impact of that interview we've been playing with the Treasury Secretary Scott Bessent. You saw dollar and yields dropping, the 10-year now at 4.23, euro dollar at 1.17, and Bitcoin hitting its a record yesterday and continuing to march higher now, up 0.3%. Gold higher as well off this push for Fed cuts. 50 basis point cuts is what the Treasury Secretary would like to see, but also gold minding this summit tomorrow between Trump and Putin. So we'll have full coverage of that, of course, out of Alaska. But let's dive into the Asia market movements now. Min Min Lo's on standby for us in Hong Kong. Min Min, what are you watching?
Hey, Lizzie, yes, it's also a sea of red here in Asia across most of the regional benchmarks today. Japan, Korea, Taiwan, except for onshore China, which is still doing pretty well. But I want to look at the yen today because you can see we are now strengthening by 0.6%. This is the strongest level that we have been seeing in about a couple of weeks now. And that's after Scott Bessent made his comment about how the BOJ is falling behind the curve when it comes to addressing inflation and hiking rates. So you saw this decline in the USD JPY, and that has an impact dragging down the tech-heavy Nikkei 225 index as well. Last I checked, I think it was down about 1% plus or so. And flip the board, take a look at how we're doing in China because earnings season is happening right now. We have Tencent reporting yesterday solid results in the second quarter, the fastest growth since 2021. And here you can see the earnings estimates overall. We are recovering close to the levels that we have seen in 2022. Not quite there yet, but on its way. So perhaps that is what is fueling the interest in the Chinese equity market because we are seeing the turnover topping 2 trillion yuan, which is very high levels. It's close to the levels that we had seen during the DeepSeek moment. And this is despite the credit data that we got out of the PBOC last night showing a contraction. For the first time in nearly 2 decades, both corporates and households are pulling back their borrowing this time, focusing more on paying back their loans rather than taking out new loans. And that reflects the sentiment, the weakness in consumer appetite here for spending in China.
Tariffs? What tariffs? Min Min Lo, we thank you for that look at those earnings. Min Min Lo out of Hong Kong, we thank you. Now, let's go to Africa. The US is cracking down on the illegal mining trade in eastern Congo, and the Treasury Department has sanctioned an armed group and 2 Hong Kong-based firms, accused of fueling violence and smuggling conflict minerals. Let's get more now with Bloomberg's Ondiro Aganga. She joins us now. Ondiro, is this an indication that the US is now fully committed to resolving the conflict in eastern DRC?
Good morning, Lizzie. 100%. If you take a look at the language that was being used and even the stance that the U.S. has taken, it indicates and points to that. And it dates back to when the U.S. senior advisor to Africa was in the region, Mossad Boulos, who've seen a 360-degree shift for what was supposed to be a forgotten conflict. It's now at the center of news and at the top of mind of America. And in a statement, they sternly warned that the U.S. will not hesitate to take action against any groups that will prevent the U.S. from accessing critical minerals that are vital for their national defense. And the statement goes ahead to outline what has been happening in the eastern part of DRC. They highlight a group they named as Pareco FF, which is one of the more than 100 armed groups that is operating in the eastern part of DRC. In quest for territory, they say how they've been mining illegal minerals, taxing locals. And then these minerals were sold to CMDC, which is a local DRC company, before they were sold to the Hong Kong-based companies. And this is where the problem comes in, where the U.S. says that you had full knowledge that these are minerals that came from an area that has conflict, making them blood minerals that were smuggled out of the country illegally. But there are 2 very interesting things. Rubaya is an area that produces nearly 15 to 30% of global total coltan production. And also, currently, it's being controlled by M23, which begs the question, will we be seeing sanctions against them? But until that comes, choices have have consequences, and the consequences for the three parties involved and named in this statement will be that they'll be blocked, there'll be sanctions, and this is not the first time that the U.S. is doing this. They've sanctioned high-ranking government officials in Rwanda. They've sanctioned Gasabo Gold Refinery in Rwanda, and also the leadership of Rwanda Minerals Board, as if to send a clear message that if you interfere with our business interest in DRC, there'll be consequences.
Well, on that business interest, how is American business interest taking shape in the DRC so far?
We're beginning to see a few projects begin to materialize or begin to unfold in a way that offers some form of promise. If you look at Symbian LLC, which is a New York firm, they intend to build 140 megawatts of an electricity project along the border of DRC and Rwanda. But this is pegged on whether both countries can implement the peace deal that was stewarded by the U.S. A couple of weeks ago. You also have a $700 million methane gas project in Lake Kivu. And Bulos also alluded to a $1.5 billion electricity project that goes all the way from Angola to the copper and coltan mines in the cobalt mines in the Democratic Republic of Congo. But there's only one problem, which becomes a thorn in their flesh, because this is an area, again, like I mentioned earlier, under the control of M23. And the CEO of Symbian has said that until there's peace, stability, and the rebel groups have pulled back, this project cannot happen. But M23 have not shown any indication that they're willing to back down. If anything, they're standing on their territory and they're saying they're not going anywhere.
Ondiro, great reporting. Bloomberg's Ondiro Oganga, we thank you so much. Now, I want to head south. South Africa pushing back against a report published by the Trump administration that says that the human rights situation has significantly worsened last year. Pretoria calls the findings inaccurate and biased, accusing Washington of relying on discredited sources. Our chief Africa correspondent Jennifer Sabasaja joins us now for more from Johannesburg. Jen, what more did they have to say here?
Right, Lizzie, this is just another example of the worsening situation between the United States and South Africa. And if we take a look at exactly what we did hear from Pretoria, they actually said profound disappointment in a deeply flawed report. And those words coming from them, not me. And that is really because if you take a look at this advisory that we did get from the State Department, which I was looking at, they do, as you rightly pointed out, note that there is a, quote, worsening situation. But they say that the worsening situation did happen after the signing of this expropriation bill that we saw. And of course, we do know, and many people have noted, the inaccuracies that have been touted by the U.S. administration about some of the complexities of this bill. And South Africa notes that this is actually quite ironic that the U.S. is throwing these accusations against South Africa, especially because this is a country, in the U.S. I'm talking about here, that actually exited the UN Human Rights Council, and South Africa, again, noting a lot of what they see as not preserving the rights of humans in the U.S., talking about a number of the situations that we've seen over the past few months since the Trump administration came in with the ICE arrests and such. And so I say that to say it is seeming like, again, the situation between these two countries is really souring, so much so that South Africa feels the need to continue to present and reiterate some of the facts that they've tried to do. We of course, saw President Cyril Ramaphosa do it in the White House next to President Trump. But they put out a note after this advisory from the State Department saying that they plan to submit documents proving what they say, even what the UN has said about this expropriation bill, that in fact, potentially it actually levels the playing field for minorities in the country. And this, of course, Lizzie, just a reminder, coming just a few months before South Africa is hosting the G20 conference, which we still don't know whether or not President Trump is actually going to be here.
But when you've got mud being slung in both directions, Jen, where does this leave the trade talks?
This is probably the most concerning for South Africa. What we do know, the same day that this advisory did come, our understanding is that South Africa submitted a revised trade offer to the U.S. And this is because, of course, we know South Africa had the imposition of 30% tariffs, something that a number of economists and analysts have said could really hurt a number of key industries for the economy. And the government is also saying that they're prioritizing a number of things that that we focused on. That's diversification of exports. That's also a response package for some of the industries that are likely to be hurt, autos and citrus. And in particular, diversification is important because they say that they're going to focus on their exports to the European Union and some of the other markets in Asia as well that they say have shown an interest in South African exports. And before we go, Lizzie, I just want to point out all of this is coming, and yet business confidence here in South Africa hitting a 4-month high. So the question is, where do things go from here, and what does this mean for the South African economy?
Again, tariffs. What tariffs? Jen, thank you so much for the coverage. Jennifer Sabasacha, our Chief Africa Correspondent out of Johannesburg. Now, coming up on the programme, we're going to talk to Jaber Al-Noumani, the CFO of Oman's OQ Exploration and Production, about his company's earnings. That's coming up next. This is Bloomberg. We head to Oman now, where OQ Exploration and Production says that first half net profit fell almost 11% due to rising finance costs. The Omani energy company also reported revenue remaining flat despite the lower price pressures for oil. For more, I'm joined by Jaber Al-Noumani, CFO of OQ Exploration and Production, and I really appreciate you making time for us this morning. So welcome to the programme, Jaber. I've just discussed it was a challenging macro environment last quarter. Lower oil prices affecting you in particular. How has OQEP weathered that?
Thank you very much, Lizzie, and good morning. So indeed, I mean, it has been a challenging quarter, and I think also for the H1 as well. Despite that, OQ Exploration Production was able really to prove its operational excellence when it comes to resilience during these difficult times, how we maneuver these times. We basically managed to increase our production by almost 1.1 million barrels, despite the fact that the oil prices dropped by almost $8. I mean, in H1 this year as compared to H1 2024. With that, we managed to maintain our top line revenue at almost over $1 billion, and we posted a net profit over $400 million.
And just talk to me about the buyback as well. Why announce it a few weeks ago and not sooner?
Yeah, the buyback program, it was a I would say, thought of process that we went through. We deliberated, we discussed with the authorities. And the decision came at the right time when the oil prices basically start falling around April this year. We basically also looked into how the other majors, within the oil and gas industry, they have been practicing that, and that's the decision when we basically decided to start exercising that this option, looking into a range of a buyback program between 45 to 60 million ordinary shares.
And of course, that hasn't hurt the share price. I do wonder whether you're looking at joining the MSCI EM index or maybe even the FTSE.
Indeed. So, and we are ready now. In July this year, we managed really to join the MSCI index in MSX. So now we are basically the first listed entity. And of course, OQ Exploration Production, it has been always the biggest listed entity in the history of MSX. And hence, we are really now in the index and being monitored, our performance also being tracked. And with a strong performance, as well as with our high dividend yield that we're really paying to our shareholders in the range of 9 to 10%, really give that, I would say, attractiveness to our share.
So when it comes to growing the business, are you looking at investment opportunities outside Oman, perhaps?
OQ Exploration Production has I would say a funnel of projects that is always evaluating, looking into opportunities, mainly in Oman, and also seeing if there is any attractive opportunities outside Oman. But our main focus really in Oman. The balanced portfolio that we are having between oil and gas, in the range of 45 to 55, really gives us that agility to evaluate opportunities very in detailed when it comes to economics. We don't go for projects that are less than 2 digits of returns. And we always, scout for opportunities. Especially when it comes to partnering up with the big international oil companies in the globe, the like of Shell, BP, Total. They are here with us in the country in multiple blocks. Either in oil and gas, and we're really evaluating such opportunities together.
So if you're focusing within Oman, are you looking at maybe investing in the new LNG trade in Kalhat?
So we are partner in the upstream, basically field, which is Block 61 with BP. That's basically the main, I would say, block that is supplying the main feed to the LNG plant in Kalhat. We are now in discussion with our partners to review basically the field development plan, so that maybe in next year, when the feed is completed, the government might announce basically the start of the LNG construction plant.
Okay, well, thank you for the update. Jaber Al-Noumani, CFO at OQ Exploration and Production. Really appreciate you making time for this morning. We thank you so much. I want to stay with corporate news in the region. Aramco and DHL are courting investors to finance and build a distribution centre in Saudi Arabia. Bloomberg has learnt that the proposed distribution centre is expected to cost around $1 billion rial, and investors would fund construction and retain ownership of the site in Dammam. The move comes as Saudi Arabia steps up efforts to attract foreign capital as part of broader economic reforms. Well, coming up on the programme, a jailed political rival of Turkish President Recep Tayyip Erdogan is open to endorsing another candidate if he's unable to run in the next presidential election. We'll have more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now to Turkey. A jailed political rival of Turkish President Recep Tayyip Erdogan is open to endorsing another candidate if he's unable to run in the next presidential election. Istanbul Mayor Ekrem Imamoglu, who's been in jail for 5 months, says that democratic legitimacy is at stake here. And for more, I'm joined by Bloomberg's managing editor for the Middle East and North Africa, Onur And. Onur, thank you for joining us. This is incredible. This was the mayor's first interview with foreign media. What did he have to say?
Lizzie, as you said, this is his first interview since he was jailed back in March. The single most important thing that Mayor Ekrem Imamoglu said is that he would endorse and support a unified opposition candidate against either President Erdogan or a successor that he might name down the road in the next presidential elections, should he be unable to run himself. As the mayor himself said, he is not naive enough to believe that he is coming out of jail anytime soon. There are a lot of legal and other bureaucratic obstacles that might prevent him from running for president down the road. His university diploma, which is a constitutional requirement to run for high office in Turkey, has been retroactively annulled, and he is facing a myriad of charges that could bar him from being a candidate if he is convicted again down the road. So this is basically the gist of what the mayor said, in addition to the fact that, he said democratic standards are at stake, and he criticized some of the Western allies that Turkey has for being silent after he's been detained on what he says are drummed up or made up charges.
And of course, this has market-moving consequences. Just for our global audience, give us the backstory. Remind us, Onur, why he was imprisoned.
Ekrem Imamoglu, who has been the mayor of Istanbul since 2019, when he dealt a severe blow to Erdogan's governing party, AKP, the first such electoral loss Erdogan suffered in over 2 decades, has been a target of major and various probes. He said all those probes are politically motivated, but the subject of those probes are corruption charges and terrorism-related charges. In addition addition to some of the other minor ones, such as threatening a public prosecutor for criticizing him on public television. But those make up the bulk of the accusations: terrorism and corruption. Those are the allegations that he's fighting against in court, and they could put him behind bars for years if convicted.
Well, it's an incredible conversation. We really appreciate you bringing it to us. I highly recommend a read on The Terminal. Bloomberg's managing editor, Onur Ant, thank you so much. Now, we've had plenty of results on this programme, but there's one set of results that I'm sure you really, really care about, and that's for the football fans. Paris Saint-Germain producing a dramatic late rally before beating Tottenham in a penalty shootout to win the UEFA Super Cup on Wednesday. Nuno Mendes converting the clinching spot kick in the shootout to complete a PSG comeback. Tottenham had held a 2-0 lead until the 85th minute of regulation. So you can see those happy faces on your screen right there. But checking in on your markets in our last couple of minutes here, we've got futures pretty much treading water on both sides of the Atlantic this morning. Absolutely unchanged when it comes to Euro Stoxx 50 futures, but pointing a touch lower stateside. Of course, we've had this rally in recent days, fuelled even more by the Treasury Secretary Scott Bessent in his interview with us, calling for a jumbo cut at the September Fed meeting and more cuts beyond that. That had weighed on yields and the dollar. You're looking at yields pretty steady now, the 10-year at 4.23, but we are inching towards the European session, and it looks like FTSE 100 futures point to a bit of outperformance here in London. But we've got plenty to cover for you in the next hour of Bloomberg Daybreak Europe. Tom McKenzie will be here with you. Of course, we're looking ahead to those UK GDP numbers coming out at 7 a.m. London time. So Tom McKenzie will bring you a preview of that. That's coming up next. That does it for Horizons, and this is Bloomberg.